Good afternoon, everyone. This is Michael Crotty, Managing Partner at G9 Financial, coming to you August 9th today with a market update. Obviously, the markets have been not as great this year as the first 6 months, and so we wanted to make sure you were updated on what's going on with the markets. Today, we have one of our vendor partners from Symmetry, Gabe Hathorn here. Hi, Gabe.
Mike, how are you today? Thank you for letting me be here.
Awesome. Thank you for joining us. And Gabe's going to share with us a little bit of the experience we've had over the first 6 months and a little bit of where we're headed and some key points of how we help manage money for our clients. So Gabe, why don't you take it away from there?
Yeah, well, it's you kind of said it right in your opening statement, right, Mike? It's been a roller coaster of a year. I mean, we've kind of gotten spoiled the last, handful of years with the market been moving pretty much in a straight line up. But as with markets, they're always unpredictable, and there's a reason you get good returns. It's to compensate you for some risk, and so we've seen that come in full force this year. But it's been an up and down. So there's been some mixed signals coming out from the economy, and I think Wall Street doesn't really like uncertainty. So they're kind of sorting through all this and trying to figure out what's the best path forward is what I could say.
And what would you say largely is some of that uncertainty we've experienced in the first 6 months, Gabe?
Well, I mean, it's the big themes, right? It's the unprecedented high number inflation rates is really got a lot of people, on edge. As I think I'm seeing it when I buy a sandwich, when I go to the gas pump, and then you see the rising interest rates, which we're due. I think it's not a bad thing to be raising the interest rates. But it certainly is a short-term. It's a short-term pain for the rising interest rate environment, and we're not sure if we're even done with it. I mean, Fed and Jerome Powell has mentioned many times that his number one priority is to tame inflation. So we still could be in for another raise or two, depending on how the economy sorts all this out. So. The other thing is where are we at in market cycles? There's been talk of the U.S. economy being in recession, and are we or are we not? I think is a case for debate, and that scares a lot of people. As I mentioned, we've been having nothing but fantastic growth in our portfolios for the last I don't know how many years, and now all of a sudden to hear those words, it scares a lot of people, and it might take over a little bit on the emotional side of investing. And you're starting to see investors get a little bit nervous, but as you and I have talked about this number of times, Mike, they tend to be short term, and those who stick with their investments and those who stick with their plans are the ones that get rewarded the most.
Correct. And any sort of points to look at over the next 6 months to 18 months? Obviously, I think you brought up the word recession, whether we're in one or not, and that's up, as you said, for debate. If we're not in one, we've heard quite a bit, or you can read quite a bit, that 2023 will happen, or that there will be one. We're headed for one. What are the key highlights, from where we're headed of how people should invest and where they should be looking to invest? And I think you also brought up market cycles and how that might be a theme or thing to look at for the overall portfolio construction.
Yeah, so there's a couple things to look at in my opinion, right? The first thing is just diversification is always important, just because with all the news that's out there, and let's be honest, a lot of this is noise. And if you just think about you throw a dart at any date in the calendar in history, there's always a reason not to invest. Yet markets long-term tend to move forward and then to move higher. So this is no different. So where we're at today, where we're going to be 6 months from now, a year from now is anybody's guess. But from our opinion, if you have a good solid plan, and you're going to be putting that money away for a long time, we still feel the best way to be is broadly diversified between stocks, bonds, and cash. Be diversified between various countries and markets, so the U.S., international, and emerging, and then it's to be diversified within the different asset classes. We've seen some of the asset classes like growth had done very, very well, only to have a very volatile experience where value struggled and turned around and had a really strong experience. So having exposure to all of those is very important, we believe, in investing going forward. In the short term, though, you know, depends on where we're at in the market cycle. When we come out of recessions, small cap companies tend to be those early risers as they start to experience, you know, the kind of the benefit of a market coming out and really benefit from activity in the marketplace again. And value companies, if we do indeed go into recession, tend to hold up better in downturns. So we see value-oriented stocks. We see small cap stocks as really trying to, for the next 6 months, being a nice place to be. But again, I wouldn't put everything you own inside of those types of stocks. I'd just give you a little extra exposure there.
Yeah, that makes sense. And we're seeing a little of that tilting in many of the managers. You guys have always tilted that way.
Yes.
But thank you for the time today. I think that's very helpful. The big themes that we get, and not many people want to hear this, but stay invested, stay diversified. These negative years and or sets of time will happen. If your portfolio or your needs and your plans have changed, feel free to reach out to myself, Dan, Elisa, or George, and we're happy to talk about your overall goals and how that strategy might change based on where we are in the market cycle. Again, thanks again, Gabe, for the time.
Hey, Michael,
Really,
my pleasure. Thank you.
Really appreciate it. And
All right.
again, have a great day.
All right. Thank you all.